Hi there, welcome. My name is Jonathan Roth. This is Cambridge House Live. I'm joined now by Peter Spina. He is the CEO of GoldSeek.com and SilverSeek.com. Peter, thanks very much for joining us.
Thank you for having me here.
This is a crazy market that we're in right now. You've been involved in this business since the mid-90s. What do you see happening? What's going on?
Well, from a short-term perspective, it looks quite serious right now, this pullback. But I think it's important to step back and take a look at the longer-term perspective. Gold is at $1,550, $1,600 an ounce, which is quite incredible. The silver price, around $30 an ounce. It's come back from its highs, but still has done quite well over the last year or two. So, in the short term, there is some concern right now. There is some potential for further weakness in the sector. The junior stocks, especially coming this summer, have some potential difficulties. But there are some companies that are thriving in this industry right now and some that are suffering. So it's quite the interesting moment. But the mid to long-term perspective continues to be quite bullish in my view. I think there's quite an opportunity right now with this pullback. I think the question now is just what's the bottom here? What the timing aspect?
Yeah, right. So, and what is your take on that? I hear some people saying the bottom was a couple of weeks ago. I hear some people saying it might be not until Labor Day. What's your feeling?
I could see gold. The downside risk technically on gold looks like $1,300 an ounce, but as long as we hold this $1,500 an ounce support, which we bounced off of last week quite strongly, that could have been the bottom. We need to see a bit more resolution in what's happening in Europe and the U.S. There's a lot of speculation whether there'll be a QE3 or not.
Mm-hmm.
So the markets are very volatile at the moment. I can't really. I wouldn't put a bet on the bottom.
You don't want to be taken to task, or
I'd say
there's so many different, things that are coming into play.
I think the important thing is to see that we're looking for a bottom here. Whether we're at the bottom, we hit the bottom, or we're going to be a couple $100 from the bottom. Next 3-6 months, I would suspect that we're going to be moving a lot higher from these levels. So.
Right. Okay. Now, in terms of where we're at, if things do start to improve, what jurisdictions are you looking at? What areas, what commodities are you looking at?
So gold and silver, my main interest. When the market's weak, silver underperforms, and when the market is headed higher, silver outperforms. So, at the moment, I'm looking at some silver companies on the pullback and some gold companies near term or junior producers have some credible valuations. In the exploration side, there's huge opportunities there, but you have to be very selective in that part of the market. So. My main focus is looking at producers. I just returned from Mexico. I like producers in North America. Those are great jurisdictions to be in, especially down in Mexico. The skilled labor force, the cost of production, the upside exploration, and so on. There's a lot of interesting opportunities down in that area. So I tend to look for those type of opportunities right now.
Right. So mainly first world countries, places like Mexico, South America.
South America, select countries in South America. For example, in Mexico, when you are looking to go into production, you have such support from the government on a lot of levels to get that into production. Mm-hmm. It depends also, it can be also depending on what part of Mexico you're in, but overall, it's a lot more mining friendly opposed to what I see in the States. It's a very bureaucratic, very difficult process. It's a lot safer to be in production there. But then you look at Canada, and that seems to be some parts of Canada are incredibly opportunistic. Quebec with their rebate programs for exploration and all this $70-80 billion worth of infrastructure development for mining purposes. There's some very great parts of the world to be invested in, and other parts are a bit more risky. So I also see that as a pretty big factor going forward, as these other countries have more royalties or nationalization concerns. These mines or exploration projects in safer jurisdictions should see higher premiums. So I also see that as a big kind of shift coming down the road as well.
So you're staying away from producers or explorers that are involved in emerging markets or developing countries?
There's certain countries, you can look at Venezuela recently.
Sure.
Argentina's a bit of a question right now. I think that has been maybe a bit oversold or stated, but those are fears and things that had to be taken into considerations. If gold and silver are moving up because global economies are local, these countries are having issues, they're going to look at areas where they can get some money and capital, and nationalization, royalty, those kind of risks are going to become more of an issue.
I got you. Now, what about gold? The price of gold. We're just going to see $2,000 gold here anytime soon, or where do you see that going?
The gold price right now, my view is it's a great trading opportunity. It's going to be quite volatile. before it starts to make its next move higher, it could be another 3, 6, some months. I'm more looking to next year before we break out past that $1,900, $2,000 an ounce mark. So I think it's coming. It's just it might be a little more patience before we get to that point.
Okay. Now, what about silver? Where do you see that going?
Silver is a very relatively speaking here, the market's tiny. So
Yeah.
if you're looking at 100, 200 million ounces a year in investment demand, that's peanuts, $4, $5, $6 billion worth of capital coming to market. So the second you start getting sort of any interest into that market, capital investments, that's going to really shoot the price higher. It's a question of timing, but when the silver market goes, it goes very quickly. You're either in it or not, kind of a situation. I think about the next year, we'll see another approach of that $45, $50 an ounce mark. But in the short term, there could be some more weakness. You got to watch some of the supports here around 27, 26, 25. There could be some more pullback, buying opportunities before we move higher again. So.
Okay. So just looking at the junior market as a whole, then, you think that now is a good buying opportunity? I mean, obviously it is.
The valuations are incredible. I'm just a bit worried. You look around, and John Kaiser did a study recently last month that showed 55% or so of the junior mining stocks that he sampled, which was well over 1,000, are sitting on only $500,000 of capital, are trading on average of less than 20 cents a share. The capital markets, it's like a light switch sometimes. Capital's flowing in here, financing these companies. The last months it hasn't. And a lot of these companies are headed into a difficult period, yearly seasonal financing season. It's very difficult to raise money in the summer traditionally. So I'm worried that could create a better buying opportunity as these companies aren't able to finance. I think there's going to be a big consolidation. There's going to be a lot of companies who may not make it through this consolidation period as well. So I would say, there's great opportunities, but be selective and have some cash available in case this has another big pullback, which could definitely happen. So I think some risks, you need to be aware of the risks still for next couple, 3, 4, 5, 6 months.
And we also have a guy like Rick Rule who's saying that we could see a lot of mergers and acquisitions over the next little period here, where we get some of the majors, mid-tier guys that are buying a lot of these explorers or junior guys that have some real solid properties. Obviously, I would assume you see the same thing?
Absolutely. It seems like an incredible opportunity for these miners who are having difficulties adding to their own reserves and resources. So to have some companies who have now sold off 70, 80% in value, there are some incredible opportunities for these companies to make those acquisitions, and I would hope that they would do that, especially the companies, these mining companies have really seen an improvement in their balance sheets, their cash positions. They should take advantage of this opportunity, I believe, and I think we'll see that.
Now, tell me a bit about the websites, goldseek.com and silverseek.com. It's an incredible story how you put all that stuff together. How are the websites going? What's the future direction? Okay,
well, the sites have been around for quite a while. It's a free information website. We cover the gold and silver markets quite actively. The sites are undergoing a redevelopment right now, so we're relaunching brand new websites for the next couple months. So we're looking forward to launching those and continue to provide up-to-date information on the markets.
Now tell me about your own journey, because you started this as a teenager, really young. How does a teenager get involved, interested in junior mining stocks and the price of gold?
Well, the influence really comes from my parents. Their background coming from a former communist country, they taught me a lot about monetary issues, money itself, and
where were they from?
From Czechoslovakia, in the Czech Republic. They went through situations where they had a black market. They had two different currencies. They had inflation, and and gold always has been there. It's been more recent in their history as to why you need to have gold and silver, and why that is truly money. So they were a big influence, and I have a technology background as well. So I started investing in the mid '90s and got involved investing in junior stocks in the mid '90s. So that's.
So they lived the story of gold themselves, frankly the story that we might be living ourselves, depending on which way things go over the next 5 to 10 years. And that really influenced your interest in getting into this.
Right, that and really just always questioning, being very critical on what you hear. What I found growing up in the mid to late 90s watching CNBC is a lot of those analysts who came on, and the popular opinions were not right. And everyone seems to be kind of parroting the same things, and everything's okay, and there's no credit bubble, the real estate market's just fine. I think it's very important. What they taught me is to separate yourself from that. Just always question what you hear, and does it make sense to you? look at it in yourself. And I think that's really key for investors is whatever they're interested in investing in, ultimately it comes down to you to do your research and look into what you're investing in. Does it make sense? And so on.
For sure. You know what? It's fantastic advice. Appreciate you joining me today and look forward to the next time.
All right. Thank you for having me.
All the best.
Likewise. Thank you.